Well, good morning or afternoon, everyone, depending upon where you're at. And welcome to Untapped Potential, Accounting's Role in Driving Brewery and Driving Brewery Profitability. My name is Greg Pfeiffer, and I'm with Miller Prost CPAs and Business Advisors. And we are predominantly work with small to mid-sized businesses located out of St. Louis, Missouri, and have got offices in California, in St. Charles, Missouri as well. And with me today, I shouldn't neglect, sorry about that, Josh, is Josh Lance. And Josh will take a second to introduce himself.
Hey everyone, my name is Josh Lance. I am the Managing Director of Lance CPA Group. We are a virtual CPA firm specializing in working with craft breweries across the country. We do everything from accounting, tax to consultant as well. So with that, I'll hand it back over to Greg and we'll get kicked off here.
All right, thank you, Josh. So today, we really want to focus in on what is accounting's role in maximizing profitability and value in your brewery. And as a part of that, we want to highlight some of the different indicators that there may be some profit potential within your brewery and share some ways to let those brewery profits flow. And then finally, we're going to provide some best practices that you can implement in your brewery today and get to work on increasing that profit and that cash flow. Something I'm sure everybody is anxious for, especially in this turbulent time that we've gone through this last year. So accounting's role in maximizing profitability and value. A lot of times folks just think of accounting as a necessary evil, if you will, something to make sure the numbers are right and accurate and you know where you stand financially, at least on a historical aspect. So all of that is definitely true. But what Josh and I really want to do today is help you view accounting as a driver of value and use that function to really increase your profits. So by way of background, at the heart of any brewery's valuation is its future potential and future cash flows. That's what really drives someone's value of your brewery. And so there are a number of different ways, as you hear today, that you can impact that cash flow. And really at a top level, to increase your cash flow, it obviously can come from profitable growth. Those are both keywords. Growth is not all profitable, so we want profitable growth. You can reduce expenses. You can look at efficiencies and saving time. You can look at ways to reduce your waste and eliminate or at least significantly reduce that unproductive work. You can look at accelerating your collections or decelerating your disbursements. The management of purchasing and inventory and production and distribution, there's a lot of opportunity there to increase your cash flow. Looking at the safety of your brewery and where are those places that one mistake could cost you a lot of money and a lot of time and a lot of lost production. And then, obviously there's fraud, potential in any brewery too. So where are those opportunities to reduce actual theft of money or assets or time? So the key to remember is that it's not just a penny saved is a penny earned. When you're talking value in breweries, a penny saved is actually 3, 4, 5 times pennies earned. It's this multiple of earnings concept. So if you save $1 today, it could very well be $5 to the value of your business. So it's a broader perspective to remember that small changes that you make today can really impact the value of your business down the road. So just to put some numbers to that comment, imagine you've got a $5 million top line. You've got your gross margin and running about 40%. You've got some SG&A expenses. You're dropping about 10% to the pre-tax income. You're running about 40 days on your accounts receivable, and you're doing a little bit over 3 turns of inventory a year. So, somewhat in the range of normal numbers here. What would it take to increase your annual cash flow by $167,000? What would that $167,000 translate to in terms of value? If we're using a 5 multiple, that could be $835,000 of value. So let's break that down. You'll see a theme in this presentation. Break these concepts down into something that is manageable and can be implemented in your brewery. And that's something that Josh and I really stress throughout and are very passionate about that. It's not just the theory. What can we do today to really impact the bottom line? So 1% margin based on that fact pattern is worth $50,000. A 0.5% improvement in SG&A is $7,500. By working on your AR collections, if you can decrease from 40 days to 35, that's $68,000 less of cash flow that you need to operate your business. And if you can do the same on the inventory side, 5-day improvement, that's another $40,000. So you add all those things up, that's your $167,000 of additional cash flow. And then you multiply that by, a hypothetical multiple for an increase in value. So really the takeaway here is these are not huge changes and metrics to hit. These are very doable, and we're going to share some insight into how to approach the different areas of your brewery to get those changes and ultimately that value and that profit. So the role of the accounting function. And when I say the role of the accounting function, it's not just your bookkeeper or controller, it's your operations folks, it's your management teams, it's your HR, it's your IT. There are many different roles that impact the accounting function, but the role of the accounting function should be to increase the value of your brewery, cash flow, and profit, reduce the time that you are working on in the business so you can work more on the business. It should free up opportunities for you to focus on the fun stuff. Maybe that's product development. Maybe that's process improvement, whatever you value as that fun stuff, sales. By taking care of the accounting, that allows you to focus your efforts and your energies on something higher and better use, if you will. A proper accounting function will save time, reduce stress, improve morale. It'll reduce fraud risk. A proper accounting function should allow you to move from a record-keeping mentality to a driving value mentality, which goes in hand with that last bullet point. Take you from just recording transactions to being able to analyze and ultimately predict what the data is going to be. So our goal is obviously timely and accurate financials, but then to build upon that and get it to a point where you're able to focus less on the day-to-day debits and credits and more on how can we improve our processes and our margins in order to generate more profit. So with that, I'll turn it over to Josh, and he's gonna go over some indicators of untapped profit potential.
Thanks, Greg. Yeah, so I think, to Greg's last point there, that kind of move into that analyzation of how your brewery is running, right? And focusing less on what happened in the past, but how your brewery can improve for the future, I think is super important here. And one way to do that is with evaluating your key performance indicators, or KPIs. And so these are going to be different kind of metrics or ratios that you're going to look at that are meaningful to your business, that allow you to kind of see how your business is doing and kind of highlight those areas that need improvement, and also see where you're doing well in your brewery as well. So KPIs for a brewery are going to be some quantifiable, measurable values that really kind of demonstrate how effectively the brewery is achieving its objective. So if your objective is to increase profit year over year, if your objective is to improve your margins, right, you're going to use these KPIs to help understand what's going on. When we think about KPIs, and there's a lot of them out there, we want to kind of focus on the ones that are really important to us. And so there's kind of three kind of things that we want to check the box on when we pick a KPI to analyze for our brewery. The first one needs to be useful. So it's got to be something that's actually meaningful to our brewery and what we do, right? So monthly recurring revenue, which is more of a metric for a SaaS-based company, is not super useful in a brewery setting, right? So we want to pick metrics that actually make sense for our brewery, right? Like a revenue per barrel or a gross profit margin, for instance. Second, we need to actually measure this, right? So we can create the greatest KPI in the world, but we can't measure that. That ain't going to be super useful to us. And that's not something that's going to mean a whole lot to us as we try to understand what's going on in our business. And three, it needs to be practical. It needs to be something we can actually calculate on a regular basis, that we understand, that we can actually do something with, right? So Again, we can pick some KPIs that may be something that would be useful or measurable, but aren't really practical to our current setting. And those are maybe KPIs we're not going to want to look at, right? So, and some of these KPIs don't have to be financial, right? So we can look at KPIs like, what is our kind of increase in customers on a monthly basis or on a per week of the day of the week basis. We can look at looking at what it costs to do advertising and what does that bring for customers in there, and what kind of customers we gain from those situations, right? So it doesn't always have to be a financial metric. It can be a non-financial metric too that makes sense for our business. And then we want to track these KPIs over time. So just looking at a KPI all by its lonesome without any context isn't really helpful to us. It doesn't tell us a whole lot of what's going on, and it doesn't tell us the trend of where things are going. So when we look at KPIs, we want to look at that trend line of that, where we're at the month before, where we're at now, and how is that improving or not improving as a result, right? And that can start to highlight things of maybe that trend line's not looking so great. Maybe our gross profit margin is decreasing over time, right? And we're struggling with too much cost of goods sold in our business, and we're trying to figure out, okay, what's going on there? If we know that trend, we can start to figure out, okay, where are areas where we're maybe going off the rails that we need to improve on, and then things that we're trending really well. How do we continue to trend in that direction? What are we doing that's working really well, and continue to work on that as we go forward there? So these KPIs, I think, are really important. And as we start to kind of think about this, we got to kind of distill down to what are the kind of key KPIs that work the best here. So if we want to go to the next slide. So here are some common KPIs for breweries. Again, not all these are things that you maybe are going to utilize all the time, but there may be some of these that you look at on a really consistent basis, or ones that maybe you've struggled at in the past that you want to kind of keep an eye on as you go forward there, right? So obviously the first one is gross profit margin, and that is just simply taking our revenue less our cost of goods sold divided by our total revenue, and understanding how that metric looks and works and functions is important, right? The more cost of goods sold we have and a lower gross profit margin, that means less dollars available to us to pay our fixed costs, to pay employees, to kind of do our SG&A type expenses, and ultimately, if we have less dollars at the top there, it means there's going to be less dollars when it comes to net profit. And so, one of the biggest areas of focus is understanding that gross profit margin, and we can even distill that down and look at things like revenue per barrel and COGS per barrel and gross profit per barrel. Using a per barrel function is just a way to kind of common size that metric and kind of see how that trends, right? Allows you to look at the revenue in context of how much you are selling an actual beer, and kind of help you see where that revenue is coming from. And again, if we're shifting one way or the other, why is that the case, right? So our revenue per barrel may be decreasing over time, and that may be because we decided to focus more on our distribution channel than our taproom channel for sales. And that may be perfectly acceptable as a result. But we want to know and understand that context. Cost of goods sold per barrel is another one where really helps us kind of refine, okay, how much does it cost for every barrel that we go and sell, right? And that cost can be raw materials, it can be direct labor cost, it can be other, excise taxes or things like that are associated with that beer. And understanding what that looks like and what that means is important, because again, if that shifts one way or the other over time, this can be an area where we're losing profits and we're not realizing it, right? Maybe our costs have gone up and we haven't increased our prices to consider those increasing costs, and now we're just having a compressed margin there. Gross profit per barrel is just simply that revenue minus the COGS per barrel to get to that number. Some other things we may look at are things like net profit margin. So what is actually the net profit at the end of the day? And to Greg's point there earlier, we can make small shifts there that can really increase our bottom line profit as a result. Same thing what Greg said before about accounts receivable days outstanding and our kind of our turnover on our inventory. If those things are getting out of control or things where we can kind of rein that in a bit by simply increasing the how quick our customers can pay us, that can have a huge impact to our business. And that may be not something we're even realizing that. Other ratios like cash conversion cycle, quick ratio cash flow margin, These are things that we look at kind of more balance sheet related, but looks at how do we do, changing, taking that sale and turning that into cash. And how do we look at as far as our kind of current cash position with our accounts receivable over our kind of current liabilities? Are we in a position where we have a lot of liabilities outstanding that we're not paying? And we need to look at ways to generate more cash to cover that. And then looking at some of those growth type things like revenue growth and gross profit growth. I think there's a lot of focus sometimes on revenue growth, almost to our detriment, because we look at revenue growth and think that's great. But if there's all these additional costs and all these additional things going on with that, then that is not super helpful to us. And so sometimes we need to look at things like gross profit growth or net profit growth, because those are really the key indicators of are we actually financially healthy as a business. So we're going to go to the next slide there. So what does this all mean, right? So we have all these KPIs, we start tracking them. What do we do at that point, right? This is where we can start to find areas of improvement and find ways we can really increase our profitability as a result. So part of this is going to be kind of focusing on a couple of these, or as we kind of look at our kind of key KPIs for our brewery, understanding which ones we need to focus in on. Maybe those ones for improvement or ones that we're doing really well and we want to ensure we continue to do well in. So a kind of case study I'm going to kind of talk about here is we had one of our brewery clients who was really kind of struggling with profit. And as they grew the brewery, they continued to grow revenue and everything was looking great, but there was still the same amount of money kind of showing up at the net profit at the end of the day. And they were kind of struggling. What's going on here? We think we're doing really well. We're selling more beer than we ever have. And yet we're really not seeing any tangible results of that. And so as we started to dig in with them, we looked at their cost of goods sold per barrel, and we just saw that thing increase over time. And we started to dig into what's going on with why your cost of goods sold are increasing so much. And as we dug into it, we came to find out that the head brewer was buying their supplies and all the raw materials from a variety of vendors. And not really kind of leveraging the economies of scale, focusing on a few vendors to get those supplies from. And the other part of that too was he was buying supplies at the last minute. So he wasn't doing a great job of planning things out or understanding what his needs are from an inventory perspective. And then he'd be like, oh, I need to brew this beer. I need this hops. I don't have the hops. And so now he's paying a premium for that. And that was showing up directly in the cost of goods sold. And so as we kind of start to uncover these things, we kind of saw this need of, okay, we need to kind of change how we run kind of the brewery and the production side of things, because we're wasting a lot of money there of not leveraging those economies of scale, buying supplies at the last minute at premium prices. And then as a result, that was really costing us a lot of money. And that's why we weren't seeing that effect at the bottom line there of all this work this was generating. So we started to work with that brewery to kind of change that and trying to change to say, okay, well, let's start a thing about, buying our inventory of raw goods from a select suppliers and making sure we're leveraging those economies of scale, and then planning out our brew schedule a lot better. So we weren't, doing these last minute, scrambles for different hops or different grains that we needed to complete that brew. And by doing this, they really shifted from having these out of control cost of goods sold into something that was more in line with industry standards. And that all that really meant to them was a huge generation of profit out the bottom line as a result. And that was an area where they didn't realize they had these costs that were getting out of control, and by fixing that, there was this instant change in their profits, and they didn't have to sell more beer to do that. It was by getting their costs under control that got them to be more profitable as a result. So it's sometimes just finding that one KPI that seems like, hey, this doesn't seem right, and how do we kind of go to fix that, and how do we go to make sure that by fixing that we can be more profitable as a result. And one way we can do this is through benchmarking data. And this is a great way to look at how you kind of stack up against your peers, right? And some of that's available through the Brewers Association, or if there's some of the state guilds will provide some of this detail. So we ran this kind of analysis for some of our clients this past January, and obviously 2020 was a rough year, and so that roughness showed up in these metrics here. But by doing this, we're able to kind of start to highlight different things here that was meaningful, right? So this was a revenue per barrel benchmark that we did, and each of those dots represents a different brewery, and that size of the dot represents if that brewery is larger or smaller. And so as we looked at this, right, there's a wide variety variety of ranges here, right? We have, some breweries doing $2,000 per barrel of revenue. Some are struggling to get to that $500 mark, right? And so as we start to undig this, if you can go to the next slide, Greg, we started like, okay, let's bifurcate this into different kind of groupings, right? If I have a distribution heavy brewery, obviously my revenue is going to be decreased per barrel as a result there compared to a taproom heavy brewery where I kind of control the sales. I'm selling direct to the consumer. And so if I kind of start to bifurcate that out and find my brewery in that group, I can start to find some things that are interesting, right? Like, so if you look in that taproom heavy section there's that one brewery towards the bottom there at that $500 per barrel, right? They're kind of an outlier from the other breweries in their group, right? And so that would be one. Okay, what's going on? What are we happening here? And as we kind of dug into that one, we started to see that they were really struggling to move in beer, and so they were starting to really discount beer or do other things to get beer out the door. That was really pushing on the revenue, right? And that put them in such a big outlier as a result there. You can go to the next slide there, Greg. Cost of goods sold per barrel, right, is another key one. Now, typically we see this, and this is just looking at direct materials. So we pulled labor out of this one, but typically when we just look at direct materials, we see that metric below at $200 per barrel. Now, in the past year, right, things have changed in the brewing industry where they're starting to increase significantly, and it was because people had to rely on mobile canners because they need to get the beer out a different way because their tap rooms couldn't be open. And so that was an additional cost. There was additional cost of getting all those cans and supplies to package beer when a brewery may not have typically sold beer that way. Maybe they were typically selling in kegs in their tap room through pints, or they were selling those kegs to restaurants and they didn't really have a canning operation or a way to package beer besides that. And so we saw a lot of shift in higher costs as a result of that, whereas kind of like industry average is like $137 per barrel, and we're well above that for a lot of these breweries because they had to add on that additional burden and cost because their breweries kind of shifted as far as how they sold their product. If you want to go to the next one here, gross profit per barrel, obviously just taking the revenue minus the COGS per barrel to get this gross profit number. And again, we see a wide variety there. Now, if I was a brewery kind of the left end of that spectrum, I'd be a little bit concerned that I'm only generating $200 per barrel in gross profits for every barrel of beer I sold, right? That's a really low number when kind of industry average is about 500. So, that's an area, again, where we see if I'm a brewery on that lower end of that spectrum, I want to make some changes as a result to kind of improve things. Again, maybe that's a revenue thing where I need to increase prices. Maybe that's a cost where I need to lower my cost. But those are things where that's an area where I can really start to work on. If I can increase my gross profit per barrel up, then I'm going to be in a much better situation. And then this is, again, bifurcated by the different types of breweries, right? So again, we had in that tap room heavy one, right, a huge split of breweries where some, again, doing really well, some not doing well as well. And a lot of that was driven by, these are breweries that didn't maybe have a canning operation or way to package beer. And this was really hurting their gross profit as a result here.
Thanks, Josh. Yes, very insightful information. I mean, the key is not only to look to your industry statistics and metrics, but also, internally too. You can't go from 0 to 100 overnight. And so that's why I think it's as important as Josh said. There's a step there where you have to look at yourself month over month, year over year. So that you can really see the progress that you're doing too. So, as we think about, what's holding us back, why aren't the profits flowing? I mean, there are definitely the things that, Josh mentioned, low sales, margins, high expenses, receivables, inventory, all of those things impact that. But outside of the accounting area, we have to look at capacity and over and underutilization of equipment. Honestly, expectations. We're very optimistic a lot of times, and that's good, but not always realistic. Josh and I are accountants, and numbers are realistic, right? And so, we stress that there's a balance there. Time constraints, software limitations. Are you kind of caught up in this spreadsheet? Spreadsheet world where you're continually updating all the different spreadsheets with the same information. It's not helping you maximize the value. Lack of training. Are people doing things consistently? Are they doing them when they should be doing them? Looking at your labor costs. Is there too much labor? Is there not enough labor? Too much overtime? Should there be, some overtime in lieu of hiring another FTE? Processes not being followed. Inaccurate forecast and production schedules. That's huge. It's not like you're just picking something off a shelf and able to sell it the next day. There's a level of art there to determine, what is my sales forecast going to be and what's my production schedule going to look like to meet that. Expedited shipping, we hit on that. Paying too much premium prices for the raw materials. That's definitely an area of potential profit if you improve that. Low yield, high waste, sales mix, we hit on that in the benchmarking section. Urgent requests. Is your team being constantly pulled away from what they should be doing to fight fires? That does not help, the ebb and flow of production or accounting for that matter. Lack of recognition, balance of autonomy and interaction. These last few are just, getting your team all on the same page and working towards the same vision. As leaders in your brewery, it's important to set that direction and have that balance of autonomy and responsibility among the folks. So there are many reasons that the profits aren't flowing. And when I talk to brewers, they really come back to, I hear a lot of, there's not enough time and not enough money. Yes, that's true. There's not enough or it's misdirected. However, why is there not enough time or why is there not enough money? So I always say the real reason is, the products, the people, meaning skill sets and responsibilities, the processes, and the technology. Those are the general categories that we like to focus on to say, okay, where can we get better? No matter where you're starting from, you can always get better. And it's usually in those products, people, processes, and technology. So from an accounting perspective, when we want to let the profits flow, if you will, we think about the players that are in your accounting group and carrying those out. Typically there's a bookkeeper or a staff accountant. Then you have, and they're responsible for the day-to-day entry and transactions. And then you may have a controller, and the controller is really responsible for making sure that those are accurate in their entry and that the financial statements are timely and accurately produced each month, and the budget's appropriate. And then you've got the CFO, and the CFO is really taking that historical data and trying to figure out ways for the future to get higher margins, to improve profitability, those kinds of things. So you may not have, and you most likely don't have, a full-time person for each of these levels. And so somewhere along the line, you're probably wearing some of these hats or all of these hats in any given day. So highest and best use is something we spend a lot of time on, and looking at those responsibilities to figure out, okay, can this be done more efficiently and more effectively? Maybe by somebody else in the brewery, maybe outside the brewery. You never know. So the key processes that we look at and we encourage you to look at too, are listed there. Business and cash management. What am I doing in these areas to run my brewery? Customers, pricing, billing, and cash receipts. Vendors, expenses, CapEx, and cash disbursements. Money coming in, money going out. Inventory. We've talked about that numerous times. The employees. What am I doing on the payroll side, and even down to automation and use of technology on, onboarding or tracking time or time entry. Are there ways to improve there? Technology and security. We always look at those components, and it's not just cybersecurity, which it includes. It's also physical security. How am I safeguarding my assets? How am I keeping people safe? Those kinds of things. Risk management and internal controls, financial and tax planning, organizational structure, goals and planning. It all starts with the vision and communicating that strategy down to folks. And then product development, sales, and marketing. So all of these processes are throughout a brewery and a part of all breweries. And the key is, what can we do in each of these areas to get better? And then as far as technology, I am probably middle of the road. There are some places where technology is very much appropriate and needed, but I really encourage you all to evaluate the need, the use, and the benefit of technology. Do we need it? Will we use it? How will we use it? And what are the benefits going to be? Is it going to save me time and money? That's what I want. Is it going to increase my accuracy, my efficiency? Perfect. Is it going to provide some accountability? That's important too. And is it going to provide me actionable data and reporting? The inputs are great, but can I get what I need on the back end? Can I get those metrics to measure my performance? And then ultimately, the use of technology really is going to allow you to focus on your core functions and drive that bottom line and just get better from where you're at today. So, I guess these are kind of our words of wisdom. I didn't necessarily confer with Josh on making this list, but I'm sure he's going to agree with it, based on what we know of each other. But begin with that end in mind. Where do you want to go? And that can be at a holistic level in terms of the brewery. But then as you're evaluating each process and sub-process, where do you want to be? What does that look like? It's equally as important there. Recognize that you don't know what you don't know. It's okay. We're not expected to know everything about all things. And so that's where it's good to have those resources available, as you're learning throughout this conference and all the other conferences, that there are folks that can help you when you need help. We've said it numerous times, small changes can result in a big impact. And then the KISS principle is always appropriate. Keep it simple. No sense in overcomplicating things. I found, and I love this phrase, cliche, if you will, plan the work and work the plan. It takes a lot of the guesswork out and keeps everybody focused on the tasks at hand. And then as you're reviewing those key processes that we talked about, be sure to call out, what are the steps? What are the responsibilities? What's the frequency? How long does it take? What am I using to accomplish this goal? Where am I wasting my efforts or my actual material? What are the inputs? What are the outputs? So any process that you look at, you can really undertake this evaluation of, whether it's an internal accounting function or an actual production function. These principles hold true. Review and evaluate the process. Identify again where you want to be with it. Implement effectively. We can have the best plan in the world, but if it's not implemented effectively, it does you no good. So take the time to spend on implementation and training and making sure that things get done right. And then as you go, things change. So continually monitor and work for improvement. So Josh, I'm going to turn it back to you with some best practices to implement today.
Yeah. So I think the first place to start is to invest in your accounting side of your business. And maybe that's an area where you were holding all the hats and you haven't really invested there or are trying to do the best you can there, but invest your time there. And beyond just accounting systems and processes, and you look at your process across your brewery, because a lot of the things that we have mentioned here today aren't necessarily purely accounting things. There are things that are outside that realm, but have a dramatic impact to your business. So make sure you're investing time into that. Make sure you're investing in the personnel that are doing it. So either you're gonna have that in-house or hire that outsource that to a CPA firm, for instance, to help you with that, right? Again, you don't have to be that expert that needs to know everything when it comes to accounting. Rely on the experts to help you out in that world. And make sure being timely and keep out their accounting. We can talk about KPIs all day and how wonderful they are, but if you haven't done bookkeeping in 6 weeks or 6 months, right, like we don't have any good data to work off of here, and those KPIs aren't going to be super relevant to you. So make sure you're keeping up with it. It's not I'm just going to do it once a year when it comes time to taxes, or every quarter because my accountant's bugging me about it. It's something you want to keep on doing all the time and keep that as up to date as possible. Because if you have that up to date as possible, now you can get KPIs from that real time to then allow you to evaluate how things are doing. As Greg said, set goals for where you want your brewery to go. Every brewery is going to be different. Every brewery is going to have different kind of, aspects of what they want in their brewery and what they don't want. And so you don't have to be just like another brewery that exist out there. You're going to have your own goals and things you want to achieve and accomplish. So as you go about doing that and thinking about that, making sure that your KPIs are aligned with those goals. And make sure you set time to actually evaluate and analyze this stuff, right? You got all this good data in your brewery, and if you're not taking time to actually look at what that data is telling you, then that's not going to be super helpful or useful to you. So set aside that time. Again, confer with experts if needed to help out with that. And then when it comes to KPIs, pick 3 or 4 of those to look at. Again, there's a lot of KPIs you can look at. Focus on the 3 or 4 that are the most meaningful to your brewery. Again, it keeps it kind of simple in that regards. And then have champions within your brewery to help out with that, right? So in my example of with the brewery struggling with their cost of goods sold, have the production manager or the head brewer, be a champion on that KPI and have them be responsible for improvement there. And if you get them to buy into like, hey, this is what needs to happen, how we need to improve, you're going to get more buy-in to that happen in the brewery versus you trying to control the whole situation and making, seeing that, to help them to see if that works or not, right? So sign those champions, have people invested into seeing this, achieve fruition, even put some monetary benefits to that as well, right? If we're able to improve this, I'll give you a bonus of X as a result, because that'll get people invested into doing this. So these are just simple areas to kind of start out in and to do. There's a lot of things that are out here that we talked about. But again, start it simply, find those kind of key areas you want to focus in on and start there.
I think that's excellent advice. And, we've had a few folks ask some questions and, as far as, some of the KPIs, I think we've covered that, start, revenue and cost and margin per barrel, very important. Anything on that profitability side, is something you definitely want to be monitoring and measuring, especially down to the gross margin level, for sure. And then on the balance sheet side, those look to your biggest impact items. It's AR and AR inventory and AP. And a lot of times AP is kind of the fallout, so there's not much you can do there. So look to that AR and inventory and manage that cash. And I think a part of that too is really developing those cash forecasts. Start with that annual budget and break it down into rolling 13-week forecasts, or even weekly forecasts, depending upon your particular situation, so that you've got an understanding of the ebb and flow of your cash flow. Yeah. I think too, what tools are recommended is another question for monitoring and tracking. It really depends on where you're at and the size of your brewery too. I mean, a lot of folks start off with clipboards, and tracking everything, that way, very manual. And then they graduate to, spreadsheets, hopefully at least shared spreadsheets where everybody can have access to similar data. And then as you get, to the appropriate size, then you start looking at enterprise resource systems, that are integrated between your production and your accounting and your sales and, all of those functions is ultimately where you want to go. So it comes down to where are you at in your journey. I mean, you don't want to spend 6 figures on a software system if it's going to take you 20 years to pay that up. So there's some ebb and flow there. It's really dependent upon your particular circumstance.
Yeah, again, all it kind of depends on what softwares you're using there when you kind of track those data points, right? But if you're using like a QuickBooks or a Xero for your accounting software, right? Like a great software that can kind of plug in to that to kind of look at your KPIs and manage that is a software called Fathom, and it's just an integratable software, and that's where you can kind of select the KPIs that you want, and it will track those for you. You can kind of see the trend lines of it. You can kind of easily monitor and manage those from there by looking at the dashboard. So it's a really great software. It's really cheap. It's like $20 a month or something like that, right? So it's not insanely expensive, but it's a great place to start, especially if you're looking at some technology to push that along.
Absolutely. So I think we hit everybody's questions throughout the presentation. If not, certainly post your questions and we can address it. But in conclusion, where we want to have people focus is where they want to go, and really stack that up to where they're at and address those gaps. And at the end of the day, those gaps that are addressed are the ones that you really truly understand what it's costing you in terms of profitability and time and stress, honestly. So focus on products, people, processes, and technology to close those gaps. Monitor those KPIs, continually improve. What you do today may not work a year from now, most likely won't work a year from now. So continually improve and monitor that. And, save time, make money, reduce stress, and increase value. That's where we want everyone to go. All right, Josh, I'm not seeing any more questions.
Yeah.
But we really appreciate the opportunity to participate and speak with you today. And of course, if you have any questions, you've got our contact information. So feel free to reach out to either one of us, and we will assist.
Awesome. Thank you, everyone.
All right. Thank you, everyone. Take care.